such law.
Okay, now the other thing the tax honesty community believes is that the 16th Amendment wasn't ratified.
Well, that's kind of a political question. There certainly were some oddities in the, declared ratification of the amendment. There's been good research done that makes pretty clear that there were a lot of quirks in the various state ratifying procedures, and interestingly enough, that ratification was declared accomplished just a few years after Congress had passed a new statute explicitly declaring that oddities, even apparently trivial oddities, or what some might view as trivial oddities in ratification procedures, were not to be tolerated. That the ratification process for a constitutional amendment had to be very explicit, very clear, and without error or mistake. And yet the 16th Amendment's ratification process was rife with all manner of errors. And looking at it from that standpoint alone, it is almost inescapable to conclude that it was not properly ratified. However, that said, the 16th Amendment was largely immaterial to the application of the income tax as far as most people are concerned. All that it did was close a relatively insignificant loophole that had been opened by the Supreme Court in a ruling called Pollock versus Farmers Loan and Trust in 1895. And the consequence of which, the loophole that was opened was a loophole that thwarted the application of the tax to dividends enjoyed by investors in federal entities, predominantly national railroads and national banks in those particular cases. But the 16th Amendment closed that loophole. It said that the reasoning that the court had used in the Pollock case was that to tax the fruit is the same thing as to tax the tree, which is to say to tax the dividend is the same thing as to tax the stock from which the dividend proceeds. Since the stock is personal property, a tax on it would amount to a direct tax. Therefore, one can neither tax the stock directly nor the dividend because, to tax the dividend would amount to a tax on the stock. 16th Amendment severs the connection between the source, which is the stock, and the proceeds, which is the dividend, and says that can't be used as a means of thwarting the application of the tax to the dividend.
So this 16th Amendment reason isn't a good one to stand on for avoiding or dodging or staying out of the income tax system. Explain to us why the idea of avoiding the system, a lot of people think they shouldn't file a return at all, and that's the better choice to make.
Well, it's a terrible choice to make. In cases in which evidence has already been introduced concerning their receipts or about them. People in America have been trained to produce legal documents associated with every payment that they make to anybody else. It's a terrible thing. And we'll talk perhaps more about this in a little while, but they do. These instruments are called information returns, and most people encounter them in the form of W-2s, 1099s, and K-1s. And what those documents are they're affidavits that declare an amount paid and also declare that the amount paid was paid as a consequence of the recipient engaging in a taxable activity. In the vast majority of cases, the people creating these information returns have no idea what they're doing with these. This is why I say this is a terrible thing. That's the point where we reach, what might be a criminal aspect to this, to the tax misunderstanding. Most of it is an honest misunderstanding generally. When someone signs under penalties of perjury a document involving testimony about another person, and they haven't even bothered to look to find out what the testimony they're making actually is and what it actually means, that's pretty bad. Morally, it's terrible. Legally, it is criminal. There are statutes criminalizing it. But in any event, this is what gets done. And when that testimony has been introduced in the form of these information returns, someone who stands silent, someone who refuses to file an instrument in response, allows that testimony to prevail by default, to very simple process. It's the same in the tax system as it would be if someone were to testify about someone else in any other venue or for any other reason.
So the
if you stand silent, you lose.
Right. So the 1099s, the W-2s, the K-1s that are filed about you or returned to the government, to the IRS every year by your employers or people with whom you've contracted to do work, those are affidavits. They're legal statements that you were involved in a taxable activity, right?
Correct. That's correct.
And I believe that that's because the form itself is used. The form...
That's correct. The form, the specifications behind the form, the specifications in the law that dictate what this form is to be used for, what these forms are to be used for, very explicitly say they're to be used for reporting income items, essentially. I use that as a kind of a shorthand. And in fact, let's get something else out of the way that I've been using a shorthand, and it's important that people understand this. I'm not going to dwell on it a great deal, and I'm going to continue to use the shorthand, but I do want it to be clearly understood. Income within the meaning of the law, the tax law, is not the dollars. It's not the gain itself. It's the taxable activity that was engaged in. That activity is measured by the dollars that are produced as a consequence of the exercise of that activity or the engaging in that activity. So the dollars can be used and are used routinely as a matter of shorthand to refer to the taxable activity, but it's actually the activity that is being taxed.
I see. Well, we're leaving for break. It'll be brief, and we'll be back.
Should be using this product as a prevention.
Misunderstanding of the tax, because people see those who are subject to the tax apparently paying a tax on the dollars they receive. People come to imagine that it is the dollars themselves that are being taxed, and they think, well, I make dollars too, I guess, therefore my dollars are also subject to the tax. That's not the case at all. It is the activity that's measured by those dollars, and so it's important to keep that in mind, even as we use the shorthand, just as a matter of course.
So that's very interesting, because this has swollen into a national tradition, the paying of income tax. Everybody believes it's what you do. It's part of life. And somewhere it was forgotten or erased that it only pertains to specific kinds of activity.
Well, I think more importantly, somewhere it was forgotten that the constitutional structure that the founders and framers set up for us intended to restrain the federal government. And one of the key means by which this was accomplished and provided for was by leaving authority over and control over individuals' resources and wealth in the hands of those individuals. That's why direct taxes were prohibited under the Constitution, and it's why there were no taxes allowed to the federal government of any kind under the Articles of Confederation, of which the Constitution is just a reform. The founders were very, very chary of this power, and they set great store by the power structure that they arranged. They recognized that sovereignty is an individual thing. There is no sovereignty in the collective. There's no sovereignty in the government, in the state. It is a delegated portion of individual sovereignty that is exercised by the state. And obviously, if the state is given the power to unilaterally, even with a democratic process that elects representatives to, if the state has the power to seize the resources and wealth of the population when it feels that it wants to or when it feels that it needs to, then the individual population is no longer in charge of the situation. They become nothing but subordinates to the state. And the founders were absolutely opposed to that. They were opposed to it as a matter of legal principles, and they were opposed to it as a matter of pragmatism. They recognized that when that situation obtains, when the state has that kind of power, then the whole process becomes one of jockeying for control of the state apparatus so as to be the one to wield that power for one's own interests, and factionism is the inevitable consequence. Technically, it was first enacted in 1861, but that 1861 enactment was entirely repealed and replaced in 1862, and that's the origin of the tax we have today.